Taking a look at today's interest rate market, let's look at the 10-year note futures as they're realizing some moderation today. They're slightly higher on the session, and that's coming off of 3 days of selling pressure. So again, a little less volatile session today, possibly setting up for tomorrow's non-farm payroll. Also, we're, as I mentioned, seeing, I think, a reaction to some of the data that was released this morning. Futures market, September future, 118.28, so at the top end of the 118 handle. And as I pointed out this morning, ADP jobs data came in much lower than anticipated. So I think that brought a bid into the Treasury markets from the short-term perspective. Now, one thing I do want to point out is historically the ADP number doesn't necessarily mimic the non-farm payrolls number. We have seen periods where there's dispersion between those numbers. So again, I think you're seeing again the potential of showing up of positions ahead of that non-farm payrolls number, with the possibility that maybe we could see that either track the ADP number or we could see it disperse from the ADP number on a monthly basis. Looking at the yields, 10-year yield down about 2 basis points to 291 basis points day over day. And we are seeing the yield curve just basically shifting lower across the 2s through the 10s today, where the yields are dropping about 1.5 to 2.5 basis points on all those durations. A little bit lower, I should say a little bit more of a drop in the nearer dated treasuries, but not much. So very little shifting of the yield curve from a day-over-day perspective. Again, market appears to be setting up for the anticipation of that non-farm payrolls number tomorrow. And also we're seeing the equity markets bouncing strongly today. So I think that that's also having an impact here on the pricing structure within the treasuries today.